It is 1:04 here on the West Coast and 4:04 on the East Coast. Going to read our disclaimer. We can get started. Wook Capital Management Inc. and its employees solely provide investment advisory services to family clients and do not provide investment advisory services to the general public. Furthermore, investments are highly speculative in nature and involve substantial risk of loss. We encourage investors to obtain advice from your professional investment advisor and to make independent investigations before acting on information that we publish. We cannot assure you that the information is accurate or complete. We do not in any way warrant or guarantee the success of any action you take in reliance on our statements or recommendations. Past performance is not necessarily indicative of future results. All investment decisions of an individual remain the specific responsibility of that individual. So now that we have that out of the way, I'm going to pin in our nest here a thread we have that gives a little rundown on the history of Bed Bath & Beyond. So looking past the stock to start here, we're going to talk a bit about the company and the retail store. Right? Yes, it was at one point a retail store. And talking about really what went wrong, what the company did, and how they failed to pivot. So I don't know, Rod, if you would like to go through the thread or if you want me to go through the thread, it's up to you.
I don't know, Joe. I mean, this was your idea. I have a feeling this is not going to be a very productive dialogue, frankly. But yeah, if you want to recap, this was a business that is a prime example of what goes wrong when you undertake a failed transformation and you make poor capital allocation decisions. You can go back to, depending on how many years you want to go back. If you want to go back to the prior round of activism that brought Triton in, and I'd rather start more recently than that. There's no reason to rehash all of that history, but 2021, 2022 era under Mark Triton's leadership, the company pivoted its previous strategy, which had been to sell name brand wares back to the roof, inside of their stores, a lot of decentralized decision making where the store managers kind of had oversight into what they would inventory in their stores. A very legacy retail business that didn't have a great e-commerce angle, didn't have the necessary infrastructure to really support the transformation that new management embarked on, where they tried to shift to a private label strategy. And it will be really interesting to see the case studies on this one. As of now, it looks like the bankruptcy plan is effective at any point, whether it's tomorrow. I don't know. I'm not privy to that insider baseball, but the bankruptcy process has largely concluded. The plan's been approved by the court. So I think it's a good example of how quickly things can change. And the course of 2022, I have up the transcript from all the way back in January of 2022, their third quarter call, when things started to go awry. And it was around that time, after that call, before the fourth quarter results came in, that Ryan Cohen became involved. I'm sure that's why many of the people who are interested in continuing to talk about the stock are still interested, because he became involved publicly in March of 2022. He ran a very brief activist campaign that successfully saw him secure a couple board seats, agreed to a standstill agreement. But I don't know, Joe. I can keep talking about the history of it. I don't think people care about that, frankly. But that's the interesting thing to me, is how quickly a failed business strategy led to the deterioration of this company's income statement and balance sheet, and that sent them spiraling into what concluded, unfortunately, with a rather unsuccessful Chapter 11. They went into Chapter 11 in April with the hope of being able to secure going concern buyers for either or any of their going concern businesses. The Bed Bath & Beyond storefronts and brand, the Bye Bye Baby storefronts and brand. And it's been a tough environment for retail. I mean, a lot of the people listening, I'm sure, saw Mr. Cohen's memo as the new CEO of GameStop, really acknowledging how vital survival is. And this is a company that didn't survive. They tried embarking on this strategic shift. It seems, with the benefit of hindsight, that there were some things that happened beyond management's control, right? The global kind of freight debacle in terms of how much cost rose for retailers to secure getting inventory on their shelves as we got through 21 and through 22. You know, if you look at, for example, that fourth quarter result in 4Q22, they they report an adjusted gross margin. Let me get my screen up here again. If you haven't joined these before, this is actually the, I think, 1 year anniversary of us doing these calls. So I'm sharing my screen in our Stages channel in Discord. Let me get my head out of the way. Yeah, I mean, the fourth quarter results that came in April. Remember, this was after that brief campaign was run, April 22 was run. Yeah, they saw a huge deterioration in their sales, in their gross margin, in their net income. You know, sales dropped by almost a quarter year over year for the fourth quarter 22 versus 21. Gross margin dropped by over 300 basis points from 31.5 to 28.3. So like, this is when things really went wrong for the company, because they continued to repurchase stock during that time. I think we're arrogant. You know, Mr. Triton and rest in peace, Mr. Arnall, clearly had a view that the business would perform better than it ended up doing over the balance of 22. And their actions, you know, singularly, whether all their fault or not, are what set the company into this, you know, death spiral. If they had opted to pad the balance sheet more and not spend hundreds and hundreds of millions of dollars on questionable buybacks that occurred, you know, within a year of the bankruptcy filing, it would have been a much different story. Could have been, coulda, woulda, shoulda. So I don't know. I'll stop yapping. Alpha, Chris, and Joe, you know, whoever's on the panel, if you want to chime in, add any color. I might have missed, Chris. I know you, for some time, were a moderator of a Bed Bath Reddit. And before you jump in, I want to say, like, the reason we're doing this is not because we're happy that this happened. I mean, no one wants to see businesses fail. But I think the intention here is to maybe educate some people that, you know, as hype as you may get about a stock token, at the end of the day, that is a public instrument trading that represents the underlying business. And in this case, anyone that was watching saw the business deteriorating. There were plans kind of put forth. You know, I hosted a call with Jake Freeman last July. He put forth a plan to the company in a way they could kind of creatively restructure their debt outside of a Chapter 11 process. The company didn't react to that in a timely manner and forsook that opportunity. So, yeah, Chris, I don't know if you want to jump in, or anyone else. And I'm just going to remove the clown that's spamming emojis and requesting to speak.
Yeah, I think you guys summarized the situation up pretty clearly. I think companies going out of business is not anything new here, right? There was the Party City bankruptcy and the Revlon bankruptcy over the past, 12 months or so. And yeah, these are very big brands, right? Like people knew Bed Bath and Beyond for a very long time, and a lot of people shop there often. You know, I had relatives that would shop there, and it's sad to see. But yeah, it just seems like the management, they were kind of in over their heads. They just felt maybe they could just keep doing things the way they were doing. And yeah, I have no, real clue what Triton was thinking, doing these buybacks, given that he knew what he did. And I think, like, in some of the bankruptcy filings, you can see, like, there's a bunch of these, like, investigations kind of going on during the bankruptcy, like, why did this happen and stuff. What were the conversations happening? I don't know. People have been posting in the Discord, the the legal fees and stuff, and they just keep adding up. But yeah, it's not a good situation, and yeah, I don't really know what to add. There's been a very big um, group of investors that believed in a turnaround over the past 12 months or so. The thesis has in that community around the company has changed and morphed into different things, and some people have come in, some people have gone, and yeah, I think at this point it just seems like a very bizarre thing, right? Like people like me who are posting online about the company back in August of last year, you know have very different ideas of this company and what situation it was in than like people who are posting now, right, on Reddit or whatever, and they're saying that there's some mystery buyout happening. um yeah, I mean, that's for anybody to decide on their own, right? If that's not a total clownish thing to believe.
Yeah,
But
look, if you want to ignore all of the court documents, if you want to believe that the participants have perjured themselves repeatedly, that's your right to do so. But if we step back to reality, if we read the 8K that was filed at this point 9 days ago, it's pretty straightforward. It lays out what happened. The company filed the petition on April 23rd. They had this dual track that they verbalized throughout the process of seeking to liquidate or ideally secure going concern buys for the businesses. Or when those didn't transpire, the result is effectively akin to a liquidation, which there's now going to be a liquidating trust that the creditors of the business will get whatever, hopefully pennies for them, they can get back on the dollar of their debt investment. But it's quite clear that on the effective date of the plan, all of these shares of common stock will be canceled, released, and extinguished, will be of no further force or effect pursuant to the plan, which means while there may be a successor entity in some capacity that issues some equity to the former creditors of the loss corporation, any loss corp equity holder, as that statement makes clear, should make clear, um, on or around September 30th, also known as tomorrow, their shares will be canceled. There's nothing for them. There's no claim. And it's unfortunate. There's been a lot of misinformation shared out there by a lot of very loud people who seem to think that quantity is more important than quality of discussion. And, we're on these platforms on a daily basis, pumping their stories, which again, you can do that. I mean, I guess that's okay for you to do, but to ignore reality, to tell people that the SEC filings are not real, to tell them that what's said in court isn't truly what's happening, it's quite sickening. It's sickened me. It's upset me. I haven't been happy about watching this play out. Joe asked to do this. I didn't really see what the upside was. The intention was to kind of, maybe put a nail in the coffin, recap what actually happened, not what people thought, I guess, or tried to convince themselves was happening. But I'll shut up.
This is kind of like the dumbest thing that I've seen in quite a while. Don't trade penny stocks, especially when they're delisted and bankrupt.
Shorebiz, how are you doing, buddy? You have any sound effects for us this call? Take that one as a no, Shorebiz. But I got you up as
While
a
he's
speaker.
connecting, I see it spinning on him. Semi, I know you requested to speak. Would be happy to hear your thoughts.
Hi, first things first, can you hear me?
Yes, sir.
Oh, perfect. So you say that this is putting a nail in the coffin, and I'm going to cautiously say that it isn't. And not for the reason that you think. I'm not like a true believer in the value of this donut. I'm going to cite the precedent of MMTLP, which, if you're not familiar, was like Torchlight Energy.
Sure. I mean, when I say put the nail in the coffin, I mean the shares are canceled. I don't mean that the cult won't live on, sadly. I think it will, unfortunately.
Willing.
You're choppy now.
I'll try coming up again later, maybe.
Still pretty muffled.
So maybe in addition to the moments of silence, which seem kind of appropriate for the circumstances, maybe Joe could explain the graphic that was advertising for the space, the toilet paper on fire.
Yeah. I mean, look, threw together this little poster. We have a ton of people requesting to speak, but I'm taking a look at their profiles. If they're completely blank, then I can't imagine anything of value will be said. Dilly, we've spoken with you before, though, so I'll add you up here, and you can go ahead. But yeah, toilet paper is on fire. Seems to sum up the situation pretty well. I couldn't find any toilet paper on fire with poop stains on it, so I had to just go with the brand new looking toilet paper, which is a bit unfortunate. But Dilly, go right ahead.
Hi guys, it's so great to hear from all of you and seeing everyone in here. I am at work right now, which is what the BBBYQ community doesn't ever seem to be doing. But I just wanted to jump on here quick and give a huge shout out to all of the women in the GameStop community that have dealt with the harassment over the last, like, however the fuck long. You all are queens, and we have all dealt with a lot, and I love you all, and you all are great. And the men too. I know that it's not just the women that have really been getting the brunt of it, but yeah, this has been insane. So yeah, thanks for holding this space. So
Have people been harassing GameStop investors over Bed Bath?
Oh yeah.
I didn't follow.
Oh yeah. The amount of alt accounts that I get that tell me to kill myself, it's unreal. Like yeah. Platinum gets it constantly. Like, I don't think she gets the same like level of like they say specific things to each person, but yeah, there has been quite an attack on very outspoken women in the community, and which has been kind of interesting. But yeah, shout out to all of you because you are strong, badass bitches, and I love you all.
Love it. I love it. Look at us showing support to one another using these spaces. I like that. We've got a few other requests here. Let's see. Who doesn't look blank on their profile? We've got Steve. You've got a blank profile.
Yeah,
Simple.
those are the alt accounts. They have like 500 of them, so yeah.
If you are in a position where you need to harass people because like you feel bad about a trade you're in, you should probably take that as a signal to stop out because that's just fucking crazy.
Oh, I literally sold the BBBYQ that I did have, which was not a lot. I had some shares left over, but I sold purely because of that. And it just, like, I don't care what anybody does with their money. Like, Rod and I have disagreed on a lot of things over the years and whatever, and I respect the fuck out of him. And I think that's normal. So we should do more of that, where we have good discussions and we disagree and discuss things like normal humans. So yeah, thanks.
All right, Dr. Chow, it looks like Rod brought you up, but you have a completely blank profile. So just know.
Yeah, he chimed in the server, in the channel. He was requesting to chime in, I think, with a view toward, well, I'll let him speak
All
for
right.
himself.
My finger is locked and loaded on the remove. If things go eerie here, let's hear it, buddy. You can, Dr. Chow, you can speak. If not, I'll bring somebody else up. We've got Simple MKE I'll bring up as well right now. Chow says he needs to set up his mic. All right, go ahead, buddy. So, Simple. Mic is yours.
Hey, boys.
How are you? I don't know if we've spoken with you before.
No. I follow the due diligence on a Twitter profile, like you usually come up on my homepage, but I'm not using Twitter that much. That's why the profile is empty. My Reddit is a lot more interesting. Is the same username. So I've been listening to the spaces while I'm preparing my dinner. I'm a European. I feel you, boys, but I just wanted to give you maybe a perspective from somebody that's been dealing with apes for the last, I don't know how many years. I think 3 years. I've been a Wall Street Bet mod for 3 years. I'm not anymore. I have a lot of businesses to do. And I heard you said that you're feeling sorry for them. And I just wanted to tell you, don't. These are horrible, horrible people. And what the lady said is just a small part of it. The shit that they do on Twitter, it's not even close to the shit that they do on Reddit. They doxed so many people, that threatened so many people. They even filed some lawsuits against some people that are public in the communities. These are horrible, horrible people. So yeah, just don't feel sorry for them. Yeah. I mean, I can go into details, but I don't know if it's interesting for everybody. So yeah.
I think it'd be interesting to hear some more. So I'm assuming it largely picked up so you said you've been a Wall Street Bets mod for a few years now.
Yeah.
I'm assuming this was pretty much post January 2021 when you started to see more and more people. Like, I mean, the subreddit got absolutely massive after GameStop.
Yeah.
And then there wasn't really a quality group of people. There's a lot of people that are brand new to the markets. Spamming all the different discussions. So maybe, elaborate on that.
So I joined the mod team a little bit later, like maybe 6 months into it. Reddit had something called, it wasn't Spaces, what the fuck was Reddit Talks, sorry, yeah. So we had a daily call on Reddit on Wall Street Bets. We had like almost 2,000 people live every day. We talk stocks, positions, plays, whatever. The beauty with Reddit is there is a rule. Like when you say shit, you need to back it up with a post. Like if I claim that I have bet and beyond, I need to post proof. That's how it works. Which on Twitter is complete bullshit, because you have all these grifters that are propping BBBY and they never even show positions. My favorite one is the British guy. Can somebody help me? What's
Sal?
his fuck? Yeah, that fucking clown. He banned me 2 times from his profile, and he even joined one of the spaces that I was at. And I only asked him, can he show his position, And I even said, like, I'll show you my portfolio right now. I'll do a screenshot. Let's see. And he didn't. He just blocks everybody. Which only contributes to the amount of delusion, when they keep blocking people that are against them. So not to go into too many details about these clowns. So yeah, BBBY came into our radar after. So for newer people, there were so many meme stocks. This is not the first one. There was fucking even Palantir, which is a company, a proper company, was a meme stock. We had GME, AMC, BBBY, BlackBerry at one point. What's the fucking name of that?
Toss, because that's what the SEC asked me about, and I'm like, I don't even know what that fucking company is, guys.
What was the? I'm European. I'm gonna butcher his name. The Indian billionaire with SPACs, Jama Palathari. What's the guy's name?
Samoth?
Clover was a meme stock also. Ticker Clov. Basically there was 6 and 7 of them. This is not anything new. There's just the same group of people. There's like 60,000 of them on Reddit. They just go from MMT, LP, Blue Apron, Party City. There's like 40, 50,000 of them. They just keep jumping ships on a different one. You know, like if you check on their profile on Reddit, like you'll see that they have been in all those groups, you know. So BBBY came into our radar maybe like I'm gonna say a year after GME, but I'm just ballparking it. And these dudes were
It was
relentless.
roughly July 22, I think, when you guys added it because it hit the market cap threshold. If I recall correctly.
Yeah. Like if you recall, you're recalling better than me. Like I don't remember. So yeah, it hit the market cap, and then shit hit the fan. We had a lot of discussions about it. Like let's say I am a business professional. Let's say I'm some kind of an analyst. It doesn't matter which kind. And there were a couple of people on the mod team that are like also some kind of analysts. And we don't need the money. Like I never took a dime from Wall Street Bets, and nobody also did. We were debating on a morality, you know, of that of that approval. But yeah, we did it. It was up to the rules, and BBBY went off because all those people that didn't invest in GME when the shit started, they all wanted a piece of it, and it just blew through the roof. Like I remember one call that we had was 4,000 or 5,000 people. I can check my screenshots live, listening to the BBBY discussion like it was mental. I had like emails from Reddit admins, you know, like what's going on, like from the employees, you know. And the first, I think that was my first initial, what's the word in English? It's not an impression, but that was my first like connection with that kind of, yeah, with that kind of lunatics. Because in that call, it was me and Loose Ventures. That was another mod also who is like a professional in this. I'm not gonna say I'm not gonna dox him. But we posted a question to them. We said like, okay, boys and girls, like this is all going fine and dandy right now, but what if BBBY goes down? Like what if this is all like a pump and dump? The amount of hate, the amount of threatening, and like it was completely insane. It was like a mad mob. Like uh, the way, like I often pondered about this, like how does this happen? And I really do feel bad about people that are sucked in. You know, I felt bad at the beginning, and I think the popularity of the meme stops is rooted in just about like how hard the times are. You know, and how like there's such a distrust in the government and the society in general from these people, you know, after COVID, after inflation, whatever, terrible job market. They know something is wrong, but they can't put a finger on it. So they're playing this fantasy like they're white knights, you know, shorting the hedge funds. They don't need to work anymore from 9 to 5. They don't need to struggle to pay the rent. It's so appealing. And at the end of it, they defeat the evil people that are trying to stop the society from being the way they want it to be. It's like I get from where they're coming from, but yeah, it's fucked up. Like this really needs to be studied by people that are way smarter than me in philosophy, you know, and maybe even medicine. I'm sorry, like I'm just rambling now. I hit the monologue for like 5 minutes. Yeah.
No problem. Appreciate the thoughts from your perspective. So AME, Dilly, you both came back up. Samuel, aka for those of you in the GME DB server, Shorbus. For the ease, I guess, of letting the conversation flow, just put your hand up if you want to chime in, so we can kind of toggle between people respectfully, and yeah, we'll see where the conversation takes us. But Mr. AME, if you'd like to chime in, please go ahead.
Okay. Hey, thanks for having me up. I was just wondering, like, when I look up the terms, like the definition for canceled, released, and extinguished, like all the definitions come up as that it's referring to shares that the company has already bought back or hasn't actually sold yet. And so I was wondering, and then there's other kind of companies that have done similar things, like if you look at it for precedents. So I was wondering, what precedents are you looking for, and what's the definition you have for those terms? Thank you.
I mean, I'm just looking at what the company has said, and the company said that they have 782 million shares of common stock issued and outstanding, and that those shares will be canceled. All of these shares will be canceled. So, look, I think that, and I've said this in other venues, the way in which the Hertz bankruptcy resolved itself in a very unusual way, unfortunately, set a very a tail precedent that a lot of people looked to, thinking that's a normal outcome, and I simply don't see any reason why that would have been the perceived outcome in this scenario. But unless the company says something differently, it seems to me that this weekend is the cancellation date.
Okay. But isn't Hertz kind of like every few years people come out with different white papers to discuss like what, plans, kind of work. Also the fact that, don't you think that if it worked so well for Hertz, that other people would be looking to it to try and replicate it?
It worked well for Hertz because they had assets that you had a COVID event that made their assets rapidly shift in value in a way that's not usual. So in this particular scenario, the company's sold off most of its assets, and they are left with, as the latest 8K says, 42.4 million in assets and 1.5 billion in liabilities. So I don't really see how there's a corollary between the two here.
The Hertz situation was a matter of luck. Like, there was nothing management did that recovered shareholder value. The business went under, but the assets appreciated because of the pandemic. There's no comparable common ground to Bed Bath today.
So were you aware that Bed Bath & Beyond made money last month? Since you said you've been keeping up with filings, I was wondering if you were aware of that.
Whether they did or didn't, please help me understand how it changes the plan.
Well, so a lot of the people, I'm not sure why they spend so much time like researching, or at least claiming to research into a stock they're not invested in. That kind of doesn't make sense to me. But, one thing that they would always spam was they saw, that, Bed Bath & Beyond was sold to Overstock and the company doesn't exist. However, every time I would bring up that it was actually a shared IP and that there was profit sharing, they would all just say that was misinformation. So now suddenly they have income coming in, and it's assumed that it's coming from that profit sharing with Overstock because Bed Bath & Beyond still has its distribution centers. And so it just seems that and I get both sides are doing it. I don't.
As a former Ryder employee, Ryder is going to be part of, given their existing relationship with the company heading into the Chapter 11, on that liquidating trust, because the company lost tens of millions of dollars due to Bed Bath's bankruptcy. You mentioned the shared IP, which I would need to dig back into the dockets on when that IP was shared through, because that was not a perpetuity. It was for a period of time they'd be able to market the IP, or they'd both be able to market themselves using the IP. But either way, how does that change?
Well, that's kind of, see, but that's the thing is like it's interesting that you have such a confident opinion about this when there's a few kind of pivotal aspects I feel to this play, and one is the shared IP, and the limited time was actually in that Bed Bath & Beyond could back out of the deal, and that's up to kind of mid October that they can back out. So if not, it could go go on for as long as it wants, right? So it just seems that both sides, there are people from both sides. I'm not going to speak for the whole group of anyone. That would be ridiculous. But, that they're more interested in just taking ad hominem attacks rather than actually trying to figure out what's going on in the company.
What do you mean what's going on? What do you think is going on?
The company has told us that they are now have a plan they've put forth. The second amended plan was approved by the judge on the 14th, and that plan calls for extinguishment of the former Loss Corp's equity.
So did you watch the last court hearing live?
I did, actually.
Interesting.
What do you think
Okay.
is What do you think is going to happen? Tell us, please.
Oh well, it was that.
I'm
It was,
uninformed.
yeah, no, no. I mean, and I'm definitely here for a discussion, right? I'm not like I don't like drama or anything. So, if you were watching that court hearing, then you saw that kind of ever since the beginning, the difficulty was 14% of the bondholders that had a lien on Bye Bye Baby, and the Kirkland Ellis lawyer said, look, if you guys give up your claim on Bye Bye Baby, then we could actually monetize that, and there would probably be more than enough for all stakeholders, not just bondholders, but stakeholders. He said that in court. And so basically, they can't wipe out the claim that the bondholders have on Bye Bye Baby without wiping out the claim that everyone has. But it doesn't mean that they can't issue new equity to those shareholders. Like the idea of a debt to equity conversion has been a popular thing over the last 10 years. Ever since 2008, it became really popular and had a resurgence in the last few years.
Abe, I gotta interject. There's a new filing out from the company. The plan effective date is today. It's over.
Okay, cool. I'm happy because I'm confident in the plan, right? So it's all part of the plan. I'm a huge surfer. I'm all in, right, on Bed Bath and Beyond. I like GameStop as well, and I plan on
Could
buying
you tell
some.
us what the plan is, please?
Real quick, I'm going to read the new filing. The company has terminated all offerings of securities pursuant to the registration statements as it is undergoing an orderly wind down and liquidation process pursuant to the plan in accordance with undertakings made by the company and the registration statements to remove from registration by means of a post-effective amendment any of the securities that remain unsold at the termination of the offering effective upon filing of these post-effective amendments. The company
Whoa,
hereby
did you just
removes
hear
from
that?
registration
All that remain
all of such
unsold.
securities of the company registered but unsold under each registration statement. So,
Wait, did you just hear that
so
part? You just said all the securities that remain unsold, right?
are you
Could
telling
you
me
tell
that your
us?
shares aren't canceled effective today?
I mean, I guess we'll all see, right? But I think that the whole time this has been part of the thing. We have to the old shares have to be canceled. We can't have the new shares and the old shares at the same time, right?
Well, Lost Corp Equity has no claim on the new shares. That's the part the plan has made very clear.
So
They
when
will be
Ryan Cohen
extinguished.
Could
wrote
you
a
tell
letter,
us what the plan is, please? Like, I'm just curious. Like, you're going around in the circles. Like, I just want to know what the plan is for the future shares or whatever new company. For in your opinion, in your own opinion.
yeah, of course, I would only speak for my own opinion. But so if you look at the letter Ryan Cohen wrote to Bed Bath and Beyond board, he said that the short interest was an asset to the company, right? And just like in GameStop, he was able to monetize that by.
Can you tell me what he said about the short interest being an asset? I'll pull the letter up because that doesn't sound right.
I mean, it's in the first page. I think the bottom of the first page. It literally just says the short interest is an asset to the company. So, I mean, but that's also interesting. The fact that you would kind of claim to know so much about the situation and kind of all the key elements, like they seem to be foreign to you. That's somewhat odd to me. But
So,
it's okay.
so
If
the
anyone
letter
can.
specifically says, however, we and apparently a large portion of the market based on Bed Bath's short interest doubt the company can simultaneously buy back shares, cut expenses, invest in its infrastructure and growth, launch new offerings, and meet customer demand for core goods. That's the only comment about short interest I see in the letter, so I could be missing something.
In his first letter to the board?
A letter dated March 6th, 22.
Okay, interesting. Well, I guess I'd have to pull it back up then. But I'm fairly confident it says that. I mean,
Maybe it was metaphorical that the price is so low and now they can do whatever they want with the assets.
but how much money was raised from GameStop selling into the squeeze? Like, wasn't that valuable?
Well, they didn't
Who?
sell any shares into the January squeeze.
Yeah, they didn't.
I mean, okay, so the like at whatever point they sold them, it was a lot higher than what it was, right? I mean, similarly, the price GameStop was
we
priced
talked
for
about this
bankruptcy.
yesterday for sure. It was from a corporate finance perspective, one of the best trades in history. They repurchased millions of shares at a split adjusted dollar and change level, and sold shares at roughly almost 100 times, 50 to 100 times that level. So yeah, it was wonderful for GameStop. They're much more well capitalized today than they would have otherwise been.
But similarly, right? You said that that's kind of unprecedented when we were talking about Hertz. So you're saying like, oh, that's just kind of like something that doesn't typically happen. But like if you look back and think like, what are the two things that have worked really well in the previous history? Well, one is Hertz and one is GameStop. So why wouldn't those be sort of the new precedents that people are looking towards to in their financial transactions?
I don't get what you didn't get with Hertz. Hertz had assets, cars. In COVID, cars went up. That's how they got their loan to do whatever they wanted.
So what assets did GameStop have?
GameStop had a huge amount of influx of people wanting to buy their stocks, which usually doesn't happen.
And so does Bed Bath and Beyond. So like that's exactly my point.
That's what you think. No, that's what you think. So if we compare the data, let's just look at the data, right? Superstrong has how many people on Reddit? Like 800K. How many does BBBY has? 60K. Is that the same?
Yeah. Well, I mean, we all know you can buy.
I don't know what's funny.
You can buy followers, right? I'm not here to fight because
wait. No, okay, sorry. So you're claiming that Supersong bought followers to prop GME cult? What? Sorry, not a cult. GME movement.
Simple. Let's back away from this. I'd like to let some other folks chime in. Semi,
yeah,
if
sure.
You could chime in because you were having the audio issues before, and then we'll get to Samuel.
Yeah, I'll drop the topic I was going to talk about before and just address what AME was talking about. I think when you look at these special situations, you have to address them individually as special situations. So what was good for GameStop or Hertz, which were both very different situations, may not apply, not even a little bit, to Bed Bath & Beyond. I think that's what Simple is getting at.
Semi, could you move your mic closer? It's just pretty muffled.
How about now?
Oh, that's so much better. Go ahead.
Okay. I'll try not to repeat myself, but first, I think when you're evaluating special situations like GameStop or Hertz, it's important to look at them in the context of that particular situation. So what worked there may or may not work for other companies. And for every one of those, you've got dozens that just go under, and Bed Bath & Beyond is one of them. Also, when you say that short interest is an asset to the company, I do kind of agree, but probably not in the way that you're thinking. So that short interest is sort of like a stored potential energy, right? Every short seller is a marginal buyer. So eventually, they're going to want to cover that short. And that is an asset to the company if they can force that covering. First, that's securities manipulation if they're doing stuff exclusively to make that happen. But second, it's kind of like saying that you have, like, I don't know, a coiled spring in your pocket while you're falling out of an airplane. That potential energy of the spring is only going to get you so far.
Sam, you just muted yourself. Were you done?
Yeah, I am done. Thank you.
Okay. Chapin, hang on a sec. Let Samuel, you got your hand up. Again, just if you want to get a word in edgewise, let's use the hand raise. Shorbis, go ahead.
Oh, hi. Can you guys hear me all right?
Yep.
Okay. Yeah, I don't know if
and just before you get going, again, the 8K just came out, and it's pretty straightforward. I have it on my screen. It makes it clear the confirmed plan became effective on Friday, September 29th. And it notes, quote, as a result of the confirmed plan becoming effective, all of the company's equity interests, consisting of outstanding shares of common stock and Series A convertible preferred stock of the company and related rights to receive or purchase shares of common stock, were canceled on the effective date without consideration and have no value. So go ahead.
Okay, yeah. Makes sense. Sorry, I had trouble connecting earlier. I don't know if that showed up, but my thing I want to add, they were talking a little bit earlier, like I guess half hour ago now, about, and just now actually, the numbers thing with Bed Bath & Beyond and how people are targeted by influencers. And I just want to point out, I think it's also a lot of like chatbots, you know, I don't know who's wants to bought BBBY stock, but it's pretty easy. You don't need like a mega corporation to start an alt account and subscribe. It takes like 5 seconds. And people, I think, probably are doing that too. And that's part of the reason it seems like there's such a hysteria. You see this in political events where there's like a hysteria and all these people flooding in. And who knows how many of them are even real accounts. There's like sketchy people who made one post. I guess I've made no post in this account and started like 2 days ago. But so I think that's part of it. People don't realize how much of their media traction is actually kind of fabricated. With GameStop, it's a little I guess we shouldn't get into GameStop, but I just want to point that out. And I have I guess it's kind of late now, but I have a intro. Rod, do you want to hear my intro?
Yeah, sure, Biz. Let's hear it.
All right, let's see if it sounds okay. I'm not sure if it's going to sound as good as last time.
We'll need an outro
Oh, God.
as well.
I have one.
Welcome to GameStop Due Diligence. Bed Bath & Beyond, 10th Street, released and extinguished.
All right, so
Well,
now the
Halloween's
conversation
about 30
is
days
start.
away, so thanks,
Now we can
Shortbiz,
begin.
And now,
for that.
now we're started.
Chapman,
Thanks.
I'm gonna let you go after he get. Are you done, Shortbiz, or are you gonna?
Yes, that's all.
Beautiful.
Okay.
Beautiful.
All right, Chapman, you are a CPA. What do you want to say?
Well, I mean, I guess, I've never been involved in this stock. I'm just sort of going over the post-mortem assets here. I mean, it looks like you had a sort of the business starts effectively crashing at the start of COVID, and then you get a little brief turnaround in what was it look like? It looks like the August quarter of 2020, and they actually make a profit, no K1 basically, and then the next quarter the buybacks start, and then they never really stopped. But at the same time, what looked to be, I think there's some of that in maybe management's eyes at the time. This is just a guess that they had seen this sort of recovery, and that this was the bottom. The bottom was in basically, and everything's just up from here. We can have buybacks to the level that that historically speaking were rather tremendous, and just never did. So whatever the recovery plan just didn't work. I don't know. But they definitely sort of were buying back stock that was just, I don't know. I've been looking at it and it's just like, oh God. And then they had debt coming due, and this is just what happens. They go into bankruptcy. And
Their compensation was connected to the price of the stock. That's why they were doing buybacks.
well, I mean,
It's fucking illegal,
well, you could,
and they should have been
well,
arrested.
you could see the stock price actually took a jump when they initiated that first round of fairly large buybacks in COVID. So, but the problem is that they kept going. I mean, if you were wanting to sort of jump this stock price up and then issue equity, you stop wasting a lot of cash buying back the stock. And it's just operationally speaking, it just seems like they just never really just the song of the financials here is that this is just a company that was in decline, and they never really had a good plan to get out of it. I mean, and as far as whatever shorts are, I mean, the shorts covered when the bankruptcy filing happened. And that's how that game works, because it becomes a taxable event to a short holder when the company goes bankrupt.
Well,
So,
today's the taxable event, the cancellation, right?
I mean, I think this was when the original ticker basically was taken off the exchange. That's when the
But it wasn't yet worthless,
well, not
right? I mean,
necessarily, because what you're shorting is that original ticker there. Then you've got the bankruptcy pink sheets, whatever else. Um, but to me, I believe the taxable event actually happens um, when the ticker's taken off the exchange. From my understanding, I could be wrong about that, but having said all that, I mean, you see, like, they have the final filing there. It's just a massive pile of liabilities, and there's just no assets. So there's really, when you're in bankruptcy court, the debtors are kind of in control. Um, this is that's what happens. It's bankruptcy, um, and equity claimants are last on the totem pole. Um, I, it's just how this works. I mean, I don't, so if there was anything that would have been for the equity holders, obviously the bankruptcy court was not convinced by any argument of that. And I don't know what to tell you. I mean, it's you just never. Bankruptcies are 99% of the time in all bankruptcies, the equity holders lose everything. That's just how this game that's how all this works.
yeah, I don't
So
know if it's 99, but I think that the vast majority of the time, as you stated, equity
I
stands
mean,
at the back of the line. The company's
you
entered the
might
restructuring because there's
buy
some imbalance of
exactly.
their,
So
they might have
well,
it.
because there's a new bankruptcy corp here. There's the estate. That estate may issue equity that may have something that it will have. We've heard of someone else in the past who actually bought bankruptcy tickers, because you find that something in the bankruptcy estate that actually has assets that has value, and you would buy the equity. But in terms of just what the original equity is, I mean, that's it's like the original balance sheet is basically gone to satisfy the creditors, and anything else beyond that would go to the bankruptcy estate. So, I mean, granted, I'm not a bankruptcy lawyer at all, but it's very well. Okay, so I'm being told that by someone else that would know this, that the cancellation of the shares. So basically, if the shares are canceled, then there was nothing there. So that's all
Well,
there
you're
is
right.
to
So
it.
today's date, though, if you were long the loss corp equity today, you've realized your taxable loss, and if you were short today, you've realized your taxable gain.
Well, there you go. Um, and that was a law that actually changed a couple 2 decades ago, because apparently this sort of became a thing where people would you would have this sort of strategy of like deferring loss. I forgot, it was something. There's something interesting in the tax code that was changed because of this,
Yes.
but
Hello.
So hang on, Luce. Before you chime in, I'd like people to just use the hand raise so we can keep folks in turn. AME has his up. Let him go, and if you want to just raise your hand, we'll get to you second. If that's all right.
Okay.
Go ahead, Amy.
Oh, okay. Thank you. Well, one, I wasn't going to say this, but when you mentioned that the shorts had already closed, it was kind of interesting that, I mean, it's the cost to borrow right now for Bed Bath & Beyond has been like 300 for the last week, 300%. And the short interest is at least posted as being, somewhere around 80 million. But that wasn't really the point I was going to make. I've kind of been itching to ask Rod a question for a long time. And that is, do you by chance know Jake Friedman?
I'm not sure what you're asking. I mean, we hosted multiple spaces together last year talking about Bed Bath a little over a year ago. So obviously I know him.
Oh, okay. So what do you think? What do you think about his position? Just after your guys' interview, what? I'm just kind of curious about the details of how that all came out, because I feel like is one of the most interesting parts of the plays, and whether or not he was part of the. Do you think he's part of the 14% bondholders?
No.
I mean, Chris and I have spoken to him. I don't know if Chris spoken to him more recently, but he I believe is on record in public of having said his view was that if they implemented something like his plan, that common equity would have been worth a high single-digit amount, which is a pretty wonderful return in a very short period of time. If you enter in the 4 or 5 handle and you exit around, let's call it 7, 8, 9. That's my understanding of what his long equity position view was, and he, as many deal with when they get thrust into the public space, is probably dealing with SEC breathing down his neck. So I'm sure he's unwilling to really come out and talk more about it at this point.
Why would he be unwilling to talk about it? Because I mean, what would he have to hide?
Cohen's not interested in talking about it. He's dealing with litigation. So
right, but he's talking in court. For me, it just like that's one puzzling thing about this whole story is why they're focusing on Ryan Cohen and not focusing on Jake Friedman when Jake Friedman bought right at the bottom and then sold at the top. And it seems like
my trades worked out like that.
Yeah, it just seemed a little convenient, but it also, seems to be maybe some evidence that he was part of the 14% bondholders and also might have some swap positions on.
Why would you believe this?
I mean, I'm asking. So, I mean, I'm just saying there's a possibility out there. So I was just wondering. I was just going to ask someone that might know.
A lot of things that I could come up with. I mean, that's a testament to your creativity, but I just don't see why you are so laser focused on these situations that are completely hypothetical and there's no real proof of it at all.
Right. Wait. Isn't this the entire play?
Yeah, I mean, obviously yeah, exactly. The entire play is very speculative, but I mean, it just seems interesting that you have 86% of the bondholders agree with the plan and then 14% disagree. So it seems that kind of something very pivotal about the whole play is that, the 86% of the bondholders, want one plan and the 14% want a different plan. And so I'm trying to figure out which side is which. And I figured maybe since you guys seem to be still following this play, even though one, you can't even buy stocks anymore. So
I can buy to close. Interactive Brokers would have let me do that if I wanted to be clear. But Dr. Chow, you had wanted to chime in earlier, and I guess you're having issues with Twitter. So I'm going to just let you go ahead, and then Luce, you can go next. Let's keep it going.
Chow just dropped down to listener. I'll re-invite him, but yeah, go ahead, Luce.
Thank you. Can everyone hear me? Is there a terrible echo?
It's not too bad.
Okay. Well, I am an esteemed mathematician. It's Dr. Luce Ventures. I have a very, very complicated formula for the people who are curious.
You have an IPSC too.
Yes, the people who are curious about the mathematics behind the calculation of Bed Bath & Beyond Q's share price. It's assets minus liabilities equals equity. So when there are more liabilities than assets in dollar value, your equity goes to zero. So all the BBYQ shareholders, that's the price you're getting. Just divide zero by the number of shares that, existed today, right? Just do that little calculation, and that's how much money you're getting. So I just wanted to clear that up. That's just some complicated math there.
What about the plan, Luce? Luce, what about the plan? They have a plan.
I'm unfamiliar with the plan. I only study math. I'm not that smart.
Dude, I'm still waiting for to hear the plan.
All right. Sick. Let's go ahead. Chime in, please.
Hey, afternoon, guys. I just wanted to say something on Jake Freeman. I was here. I wasn't completely sure what you were getting at, AME. I kind of bought at the bottom and then kind of sold at the top-ish. But, it's not like I made millions. Jake literally threw out an interesting thesis about it over a year ago. And BBBY just seemed like a good value at that time. Purchased some positions and then sold when when the Edgar filing came out for Ryan Cohen selling his stake. I'm like, okay, that's my sign to get the heck out. There was like no weird hedge fund conspiracy or something like that, and Jake was just a smart guy that was able to present a literal lifeline to the board of Bed Bath and Beyond. And once they kind of like spit out his face or just said no to it, they're the whole Bed Bath bullish thesis kind of like died for me.
It's also worth noting that he was a 13G filer, and he did not have to file again on Form 13G until 45 days after the end of the calendar year. So he didn't have to update the market that he'd exited until February 15th or so of this year. But he did, that day. He thought it was the right thing to do from what he communicated. So I know a lot of people in the kind of meme world think he's a villain, and frankly, I think he's just a kind of a child prodigy who's misunderstood and been vilified for not really a good reason. But people can have their different opinions on him.
Yeah, like I'm a moron, and even I was like, okay, this is a pretty brilliant maneuver, and like if it happens, then like Bed Bath has a chance. But once they said no to it, I'm like, okay, like it's over, kind of. So I'm selling out, and I have no idea why this is still a thing, even like a year out, But and on top of that, I was also a Hertz investor, and I traded Hertz essentially, like when it was coming up or whatever. My thesis for that one, like their assets, they actually had decent assets because the used car prices at that time was worth their weight in gold essentially at that time. But what does Bed Bath have? Like a bunch of leased, storefronts and I guess a bunch of smaller retail supplies that you got to get rid of off the shelf real quick if anybody does work in retail, or it's just an expensive upkeep. But yeah, I just want to say that in terms of Jake, and yeah, like he's just a normal smart guy, and I don't know, but and I also want to say like why we even care about this. Long story short, I mean, like I found out recently, like somebody that I know actually got into the whole Bed Bath thing, and then if he loses a bunch of money, more than likely I'm gonna be the one that has to bail him out, or like a bunch of our friends or something. So it's not it's super annoying to hear that people are getting into this without knowing exactly what they're getting into. But that's just my 2 cents.
All right, appreciate your perspective, Sick. Amy, you've got your hand up, so you can go ahead, and then Cardi. So Dr. Chow, you keep coming up and then dropping.
Can you hear me?
Yeah, we can hear you. Go ahead.
Oh, okay. Sorry, it's just like I'm using the PC version, so it's really hard, and it's really hard to balance. I tried the phone version; it's just really hard to get on the audio. So I'm really glad to be able to join into this call, because I want to kind of chime into about kind of the strategy with most of the consultants coming in, because it actually happened where I worked in live action. Like it happened within the past 4 years of where I worked. So I worked at a company called LifeWorks More Chappelle in Canada, and it's interesting because we had basically the pension management cornered, as well as mental health management. So in Canada, we have this thing called Bell Let's Talk. Basically, with Bell Let's Talk, that's also managed with mental health services by LifeWorks More Chappelle. But anyways, this company is pretty big. I wasn't too sure when I first worked with them. So I worked as basically a technology analyst, mostly structuring a lot of solutions for them in terms of the digital space, so with Windows and all that kind of stuff, to make it easier for people's productivity tools. Over time, that we got actually tapped by a consultant group called McKinsey. I'm not too sure if you guys have heard of them before. But basically, McKinsey came in to do analysis on the company. We weren't too sure what was going on. A lot of people were thinking that a lot of people were going to get fired because it's a way to do a constructive or reconstruction and then basically fire people. But it was more or less that somebody was actually shopping out for the company. And it was really interesting that we were not aware of what was happening until it started to flow in. So when the McKinsey company came in, we were still Morrow Chappelle, and then we became LifeWorks by acquiring the company called LifeWorks. They were located in the UK, and then we had no presence in the UK. So for the board's direction, they said it was more or less meant for a location in the UK as well as Australia and all these other locations. We thought it would be beneficial, but basically the company was an empty shell. There's nothing. We called it the Cardboard Town. And there was a lot of setup because the board pretty much came on board with our board, and some of the other board members didn't agree with it and pretty much left. And then we were stuck with more board members, and then some of our executives from the C-level suite just moved up to the board level, and we weren't too sure what was happening, but this is when it started to begin. And basically, they started to hire BCG as consultants. It was very interesting because BCG, as you know, comes in and then basically ramps up the bills. So it's not to be privy to what Ryan Cohen has said before about BCG. They're really crap because when these consultants came in, they absolutely knew nothing about restructuring and nothing about life cycle management with products, nothing about that kind of sorts. Yet they were paid lots and lots of money to do most of this analysis and tell us to restructure. And we kept on bleeding more and more money to the point where now we got into the pandemic and they tried to move us into a new location. Nobody knew about the new location up until 2 years later, which was about 2021. That was during about the GameStop squeeze era, and that's when I started to pay attention to those kind of things. So it's interesting because I didn't know about BCG. I didn't know about McKinsey. I only started to learn about them later on. It was so interesting because I was trying to piece together more and more why we kept on getting these consultants that just didn't know anything. And over time, the due diligence that the Superstonk and GME threads were pretty much giving about these consultants was lining up with what we were seeing. We started to see the consultants ramping up the bills. Even some of the executive assistants I was talking to, they were jaw-dropping on how much we were paying for these consultants. It was insane. And I didn't know what was happening. Our CTO pretty much had a conflict with that, and basically he dropped out. And it was more interesting when the new CTO came in, and he came from basically a Microsoft Solutions consulting company. So another consulting company came in. They were called Avanade, and it was really interesting because the CTO pretty much worked there before, and it was interesting that we didn't find it anything like a conflict of interest. It was very interesting to see everything happening because more and more the DD that I read, more and more I started to see what was happening. They bought so many liquid assets during the pandemic, and most of what they bought was like digital and electronic equipment. We were wondering why. And then until they revealed the new location that we were buying in our big downtown office, we started to discover that it was just like 95 TVs. And I'm talking about like 50, 80-inch TVs. We're talking about conference rooms for each one. Even the freaking prayer room had a TV. It was insane. So we had like a prayer room that had a TV in it, and we were like wondering why. Same with the breastfeeding room. A breastfeeding room had a TV in it. I'm like, what is all this for? And basically, they knew throughout the pandemic that there was going to be a shortage of electronics, and they bought this all up. And basically, they levered up so much debt with the company. It was just unattractive to keep moving with the company. We made the first break in $1 billion in revenue in 2021, but it was crazy because the debt was just catching up to us, and then the interest rates was what we were worried about. And it started to hit us then that the next year that our stock got hit so badly. Like we started to see the stock go from $30 down to 17, down to $15. And I was looking at the on the charts here. Is more or less interesting because on the charts, I was starting to see that the relative strength was at an all-time low, but the banks were rating the stock at $30. We didn't know why, but a lot of people were speculating at the time inside the company that we might have been purchased out. And sure enough, it came into place that we were being purchased out by TELUS. TELUS was basically the big buyer. The thing that tipped us off that was really weird is that TELUS in an announcement basically said, we're going to buy this company, but we're also paying for the debt. And I was really curious to understanding why they would say that. And it was more or less a challenge to the other companies to say, look, we're buying the stock at overpriced and we're going to buy the debt. We challenge you to basically buy out this company. And at that point, I knew that BCG has pretty much ran out the company, and all of our debt and everything was being serviced. It was brutal. But like all that stuff that you guys have been speculating that these companies come into smash and grab, it's real. It does happen. It happened to me, and it was the crappiest thing, because it ruined a lot of people's jobs. A lot of people got paranoid. A lot of people were just wondering what they were doing wrong. A lot of people got burned out from all the work that the consultants were pretty much pushing. So if you were wondering, it's just like, why would they just run this to the ground? It's all intentional. It's all intentional, because we had...
So appreciate the perspective. I mean, I'll push back pretty harshly on that. I worked for 5 years at Ryder System. I had the opportunity to work with folks at McKinsey, partners at McKinsey, partners at BCG. Look, I can understand the perspective that you shared, but in my time, I mean, consultants are very expensive, and I think oftentimes the value a company gets for paying that premium isn't worth it. It's a decision that's being made as a kind of cover your ass from management and board's perspective when kind of trying new things and changing things up. Or if it's restructuring, they want to have smokescreen for who's going to be the one who said that we should, level our headcounts, so to speak. So
yeah, but it was more or less interesting, because like even then, even with some of the reforms and stuff that were happening with the company, it was interesting that they were comparing it with the Minister of Finance for Canada, because Bill Morneau was the Minister of Finance, but he had a part with Maurice Chappelle before it came into place. So it's just really interesting that all these high ups came in, and pretty much once they got into those spots, they started to change the business strategy. And it was just like, we could have dropped the product, but why didn't we? And that's where I was confused. It's like, why are we buying all these physical assets, like all these TVs? We didn't need it. We knew that people weren't going to go back in the office. Why'd we buy into a 6-figure a month lease? It was insane. Like, what was the intention on that, when they knew that if the country was starting to go into providing all these support packages for a lot of Canadians as well as businesses, it's no different from the QE that happened in America. So it's just like, of course the interest rates are going to increase. Of course CPI is going to go up. So the inflation was there, but why couldn't they see this coming if they're so professional?
The professionals get it wrong too.
Yeah, and
we all get it wrong sometimes. I mean,
but that's
I don't know the circumstances there.
Yeah.
But I think blaming nefarious intent is probably less likely what happened. More likely, the circumstances changed rapidly.
Well, it was interesting because a lot of the good executives kind of walked out on the company. They knew that they were burning cash at a crazy rate. But the thing that was more interesting is just to understand the efficiency rates of BCG and McKinsey. Because if it's truly like the consulting rates, what kind of professionals are we really hiring? Was there some sort of brain drain that was going on with these consultants? It's really confusing. Like, what is your perspective on that?
From my perspective, it was trying to get better understanding on the implications of changes in the industry. What do autonomous vehicles mean for the firm longer term? What do electrified vehicles mean for the firm, connected vehicles, et cetera? Getting sizings on impact. That was one thing that we worked with McKinsey on. Launching a new product line that they've launched it now. It's called Torque by Ryder. I had the opportunity to work from start to when I left the company on that, and worked with BCG, and there was a lot of support on that. It was not a muscle the firm had so well internally. So, I mean, look, I'm not disagreeing that there aren't schemes that take place, but I mean, I would argue it's not the norm.
Yeah, it's not entirely nefarious, but I'm just curious, like BCG's roles, even in Bed Bath & Beyond, right? Like Ryan Cohen tried to write to the board to just pretty much cut the consultants. Is it because like the selection in the board seats was just not there for them to take his recommendation seriously?
He named, with his agreement with the firm, 2 members to the board. So it doesn't give you the ability to shape company decision-making all that much if you have I forget how many people there were on the board at the time. It was a very small minority that he appointed.
Okay, well, it's just really interesting that BCG, again, I've seen that happen with my company. I don't understand, like, it was working so well, and then these guys just came in, just started to ramp up the bills, and it's just, I don't know, the efficiency rates of their successful turnover seems to affect the companies. It affected Bed Bath Beyond. The recommendations were there. I'm not too sure. It's just like what people are expecting from consultants at this point. But I'm not bashing all consultants. It's just like I don't understand like the connection with the board's decision to continue to spend with consultants when it's not an efficient route to keep spending at that rate. Like, what is the goal there? Is it a contract agreement?
Having no insight into the terms and no insight into the company, I have nothing informative to add.
Okay, sorry about that then.
All right. Well, Joe, it's 5:20, so we've been doing this for almost an hour and a half. There's still several folks up here, some of whom haven't spoken yet. So anyone who is on the speaker panel, again, please just raise your hand. Maybe we get through a final round and we wrap this up in the next 15:30 or so. Sick, I saw you had your hand up. AME, you have your hand up. Go ahead, Sick.
Yeah, I just want to make a quick comment about the consultants. So like sometimes like there's like depending on what kind of consultants that you get, like for instance, like my friend is at Alvarez. She does mergers and acquisitions for companies that are either getting bankrupt or being bought out or combination of the two. You know, like sometimes they will hire you to do something and they'll sometimes like take a really, really weird approach. Like McKinsey is really well known in like the consulting field because I think there's like that story where there's a bunch of McKinsey folks outside counting the number of bulldozers coming in and out or being used or something like that, just to like get a weird metric and then build off a an execution plan off of whatever the heck that they were trying to do. But yeah, like what Rod said, some of these consulting groups can do very, very weird things and not get anything done at all because either A, the normal person like might not understand what they're trying to do, like they're trying to think outside the box, or B, like they might just be fully ineffective, and then you might not be happy with their performance or what they were hired to do, essentially. So I just wanted to throw that out. But yeah, for like my friend who works at Alvarez or whatnot, like they would put like a numerical value for everything, from the workers to the tables to the pencils. So that way, when the merge or like bankruptcy or whatever happens, like they get it on paper, and then they could tabulate that amount. And then what? Who knows? Like what? I know you're giving that example about your company where every room was having some sort of TV or something like that, right? And I don't know. Maybe like the consultants gave them a crazy idea to raise the value of the company in some weird backdoor way, but that's the only thing that I could say about like how consultants work sometimes. Sometimes, again, they're brilliant and these crazy, crazy ideas work, and sometimes they don't. And if you ever talk with consultant, like how they got into their jobs, like for instance, my buddy that works at Deloitte, they would give them a test where what was it? Where one of the problems was the I think it was like the Monty Python problem and a couple other problems that there's like these really crazy out of the box games. So yeah, I'm not sure if anybody else has ever applied or worked at consulting agency. So maybe you could give some background on that.
No, but you're not wrong. Like they did a great job in calculating the asset values because at the end of the liquidation, like we pretty much recovered 95% of all the expenses at that point. You're not wrong. It's just interesting that it's just like it levered up to that point where it was such a good company, and then all of a sudden that 180 happened.
All right, good stuff. AME, gonna let you chime in, and then Busty.
Thank you.
Cardi, you'd come up. I didn't see you raise your hand, but if you want to go after those gentlemen, please go ahead.
So I had a comment, but it's kind of based on an assumption. I want to make sure that that assumption is correct. Like, would you, why do you think Ryan Cohen sold his Bed Bath and Beyond position?
I
Like, would
think
it just
Joe
because he
asked
didn't?
him point blank that question. I
Yeah, he told me
don't
his
remember precisely.
thesis on the business changed. They didn't really listen to his
So,
suggestions,
as in,
and he sold. Ultimately, he sold.
so do you think like he no longer saw value in Bed Bath? I guess is the short question.
I suppose he didn't see value that surpassed the share value. Like he sold it, I'm sure considered the stock was overpriced when he sold. That'd be my assumption, and ultimately liquidated his position.
Okay, that works. So basically, what I'm, I think one key detail that I haven't heard anyone talk about, and I'm not sure why, is that Ryan Cohen had a standstill agreement with Bed Bath and Beyond, and part of that was he wasn't allowed to exceed 10% ownership of the company. And even though Bed Bath and Beyond wasn't making any money, they for some reason had an aggressive share buyback. And it's interesting that Ryan Cohen was dragged into court over a pump and dump, even though he bought several months before the run up, and someone else just randomly came in right before the run up that must have known that, because the run up was caused not by Ryan Cohen, because otherwise it would have came a lot earlier. It came because of the share buyback. And in that
I
share
would argue
buyback,
it came from being added to Wall Street Bets. There's a pretty direct relationship with the day it was added to Wall Street Bets and the subsequent price action and volume increase. But
okay,
again,
that's
we're all
fine.
speculating on price.
Yeah, but there was a share buyback and it put him over 10%. So he actually had to sell, per the standstill agreement. And so I think that someone, not saying it was Jake Friedman, knew that that was going to happen and knew that Ryan Cohen would have to sell and that it would go right back down. Do you know whether Jake Friedman bought a short position right after he sold? Because you said that he was doing it out of the kindness of his own heart, that he was saying instead of waiting to say that he sold, but yet he said it right at the top, causing even more panic, which would pull the price down even faster.
Can't speak on Freeman's trades other than the ones he'd made public. Obviously, we don't have any look into his portfolio. But yeah, no, he sold, and he was a member of our GMEDD Discord, which is public. Anyone's welcome to join that. That's discord.gg/GMEDD. He sent a message right when he sold in the public server we had on Bed Bath at the time, and he said, "Look, I'm out. I've sold." So I don't believe he was trying to hide anything. He was trying to be pretty transparent because there were a lot of people in that channel that really listened to him and respected what he had to say. So I think he felt, some sort of obligation with them to be transparent and be honest and share that he had sold his position.
So just for history's sake, I mean, that's kind of actually why I'm here, because at this point, it's not like I could convince anyone to buy Bed Bath & Beyond. It doesn't exist, right? What exists actually now is Butterfly Corporation. So, but it's just kind of a historical sense. Like, would anyone here be surprised if it comes out that Jake Friedman took out a huge short position right at the top?
It would have been a genius trade if he did, but
Would anyone be surprised if he knew that this share buyback was going to happen and when it was going to happen?
I mean, Cohen knew when the buyback was going to happen. I put together a tweet thread last March that laid it out very clearly. The company had articulated to the market that it was accelerating its buyback and it would exhaust it by the end of its fourth quarter 21, which it did. And he staggered his buys in a way that Cohen, was able to buy more than he otherwise would have. So it holds true for all market participants that they're looking to get an edge however they can.
Yeah, just pin that tweet to the nest.
Sweet. Well, thank you for having me up. Either way it goes, it's going to be a historical event, and I'm excited to be part of it. So thank you.
And thanks for tuning in, AME. We may disagree, but you do seem like a pretty level-headed guy. Hopefully you can tune into more of our discussions.
Hey, thank you.
All right, Busty, then Cardi, then Alpha Hound. You came back up, so I assume you wanted to chime in.
And I said to take a call, but I saw that the shares are canceled, so that's
Yeah, we were talking about the 8K that came out. So, yep. Busty, go ahead. You're on mute. Okay, Cardi, go ahead.
Oh yeah, thank you for bringing me up, Ron. I appreciate it. I think you had the space maybe back in January when we were initially discussing Bed Bath, much prior to the Chapter 11 filing. And I mean, from ever since April 23rd, the petition date for Chapter 11, we kind of all knew that it was going to be an all or nothing sort of play here. A lot of people thought that Ryan Cohen or Carl Icahn may possibly be involved still. Then lots of people on the other side think that there's no involvement, So I really have, and I think no one is privy to altercations that have happened on Twitter from both sides, whether name calling or questioning of intelligence, anything like that. And I think that all the negativity is just, I'm kind of over all of it. And I just hope that everybody here can kind of understand that, celebrating something, whether or not the play is over, I just don't think that we should have negative vibrational energy anymore. I think that everyone should try to be cool. I hope that nobody is intentionally nefarious in ways that obviously I don't have to kind of divulge into any specifics like that. But I just hope that we're not here to kind of celebrate a potential, loss of shareholder equity for anyone that, invested their money into the play, because it kind of seems like, from what I've heard, just, I've kind of been staying in the back throughout this space call specifically, but it does seem like there is some slight celebratory measures kind of. But that's not to say anything about anyone's integrity right now or anything. I just kind of wanted to say, let's see what happens. We have known for a long time on the face of everything, at face value, it's looked like to go straight to liquidation and everything. Then there's the camp that believes that the NOLs could potentially hold some sort of value when it comes to, say, for example, a successor entity to come out
Cardi,
of the...
before you finish that thought, did you see the 8K that came out this afternoon?
Yes, I did.
Okay.
Okay. Yes, I did. So again, of course, I'm talking just in respect to face value of what everyone's seeing. Okay. So I'll say by the end of October, if nothing happens, then yeah, we can admit who was wrong and who was right. But all I'm saying is right now, if there were for example, a transfer of NOLs, and then there's a successor entity, and for the countless hours of analyzation of the NOLs that have occurred, there's not really a lot of reason to analyze NOLs when it has been allegedly a clear-cut liquidation, if that makes sense, and shareholders have to be made whole when it comes to something like that. So at the end of the day, no one can buy the security right now, so we don't have to go try to say either which way of what people should do at this point, because it does kind of just look like a celebration, and we're not here to talk about how Playboy's doing or anything like that.
It's post-mortem, as the title says, and we were unsure when the cancellation would be, but we did get that update from the company that it's effective today, and that and that all of the company's equity interests were canceled on the effective date without consideration and have no value. That is from the 8K.
So we started the call with history on Bed Bath, just kind of going over the whole story, right? We followed this company for a long time. We had Jake Freeman, who was very involved. He was a member of our Discord, and he chatted with us a few times. We have those pinned in the nest, those interviews with him. So it's just a company that we've shown interest in the past. So now that we know the shares are canceled, the story's reached a conclusion, we're interested in just hosting this space, recollecting everything that happened, and essentially pointing out like what went wrong, like what were the warning signs? How do you avoid something like this in the future? And that's largely what the discussion started out as for the first hour or so, and then we started allowing other people to come up and speak. But yeah, no, definitely not trying to dance on anyone's grave. Definitely don't like seeing retail investors lose money. That's not what we're about. But it's important, I think, to look at events like this to learn from and hopefully make better decisions moving forward and look out for these warning signs that you can now see in the rearview mirror pretty clearly.
Sure. So nobody will be surprised at this point if the play is completely done and over. And I also don't want anyone to be surprised if there is different equity that's issued as a result of this, because no one can
that
say
equity
anything.
goes to creditors. It does not go to the extinguished interests who the plan has made clear have no claim. So again, that people are going to get confused, and I'm sure are going to continue talking about it on Reddit and elsewhere for months to come. But it doesn't change reality.
Can I jump in for a second, Rod?
So again, real quick, I'm gonna finish and then I'll dip out. So again, spending countless hours on net operating losses when shareholders have to be made whole. Yes, the current plan doesn't include equity shareholders. That's not to say that they just spent all these hours on net operating losses for no reason. So I'm gonna finish with this. Don't be surprised if this was a total bamboozle. Again,
can I speak now? I'm next.
Jerome.
Again, I'm
you want to chime in?
Yeah, I don't understand this whole idea of like, look, if you were not bright enough to recognize the situation with Bed Bath and Beyond, and you were praying for something. I mean, look, this was a fun short since 21, and like, it's not about dancing on people's graves, but it's recognizing when bad money chases bad ideas, like AMC, Bed Bath and Beyond, GameStop. I mean, we have to be honest about this. Like, this is capitalism. Bad companies go away. People lose money because they're hoping for something. You bought into a narrative. So, like, who's at fault here? Not the people that monetized the short, the people that were like praying for something that was going to come out of unicorn farts, which is what the hope was, and it still is for GameStop, and people still buying into the Ryan Cohen narrative. I mean, like, what are you hoping for? Like, this was a zero for a long time. It was a bad business, tons of competition, terrible margins, had terrible fixed costs. GameStop's a similar situation, has no competitive advantage. Like, I don't even understand why this is even a discussion. Like, it was a bad company. It went bankrupt. This has happened over and over again, especially in brick and mortar retail. So I don't understand what the goal is here. We're not dancing on graves. We're just recognizing, hey, bad companies go to zero and they go bankrupt. That's
fine. I mean, again, I was trying to finish up, and then you kind of abruptly came in the middle of it when I had already stated I was going to leave after my closing thoughts. So
right, but you were highlighting this idea of negative energy, and the great thing about capital markets is it's two-way. There's people who can express an opposing viewpoint, and the reality
past that part though, Jerome. So I was already past that point. So I was finishing
I'm just telling
thoughts.
you. I'm just telling you this was a terrible company, and if you're along the equity, I mean, shame on you. And if you're along AMC, and if you're along GME,
such profound knowledge being bestowed.
Oh yeah, no, this is profound because you were along a garbage company, so you should learn from
All right,
this.
Jerome, we're gonna let Cardi.
Jerome, I'm gonna finish. I mean, again, I think this is where the cognitive dissonance kind of comes into play. Lots of other people already knew the state of the company through Triton's old just management as a whole. That was already a given. The company was already destined for bankruptcy as a result of Triton. That's news to nobody. So you're pointing out the obvious here. There's
no equity value. There's no equity value in this company. It's complete garbage. It's Payless. It's so why would you be an equity holder in this crap?
Okay, so
you understand what equity is versus debt, and you understand how a balance sheet works. So why would you be an equity holder?
Obviously correct. So I mean, like was kind of stated before by Michael, by AME, that clearly a short interest position can be used as value for a company that's looking to turn around, or for a company that's looking to go public through the shell of a restructured company. Okay, So, and again, you kind of came in here a little kind of hot and emotional when I was just trying to close up my final thoughts here.
Okay, yeah, no,
So
you've
I'm
closed up
gonna,
your thoughts. I'm just telling you it's completely hold on, it's reasonable and rational within capital markets and equity markets especially to recognize that bad companies should go to zero. And there's a lot more bad companies that should go to zero. And yeah, I'm actually celebrating this because companies like Bed Bath & Beyond shouldn't exist, and equity markets are acting rational. So that's okay.
So wait, so you agree with nefarious managements that go in and kind of destroy companies from the inside out, like Mark Triton did, right? That is what you're saying.
No, what I'm telling you,
company was going to be a zero anyway.
No, you're not. No, that's what you're implying. That's just a fact. Hey
no,
guys,
that's not. Don't tell me what I'm implying. I'm just telling you.
That's just
you would have to
a good rest of your day, guys.
Aw, come on, buddy, stay around. I want to keep talking to you and give out those positive vibes and crystals you were talking about earlier. If you're
why is it emotionally charged for you? You're kind of weird, dude. But hey, man,
I feel bad for you. I'll be honest with you. I pity you.
Why do you pity me? Why do you pity me? What's the pity for?
Because you invested in Bed Bath & Beyond thinking there was some equity value. So yeah, you lost money, but it's a terrible company. Look, there's a lot more. There's other terrible companies that shouldn't exist. I hope they go to zero. I'm short a lot of companies that I think will go to zero, and that's how capital markets work. So AMC is crap. GME crap. I love the Ryan Cohen crap. I mean, seriously, like Chewy's a crap company too, by the way. I've been loving shorting Chewy. It's a terrible company.
But you sound miserable, dude. It's just unfortunate. I hope things get better.
I want people to understand that. I want people to understand that there's companies that go up, and then there's the other part of the equation. Companies go down because they're bad. People have been so enamored with a zero rate environment and don't understand how companies should actually trade on fundamentals. They think everything should go up, and then there's the other cohort that emerged in 21, the short squeezy people that get on Reddit and support Ryan Cohen and talk shit about Citadel and talk shit about Gabe Plotkin and those guys. But the reality is there's a lot of bad companies.
Do you support those guys?
I don't have anything against Ken Griffin or Gabe Plotkin. What have they ever done bad to me?
Point taken. All right, this was fun, guys. Thank you, Rod. Thank you, Joe.
Serious? Okay, can I ask what did Ken Griffin ever do to me?
Jerome, as entertaining this has been fun. As the ongoing back and forth will be.
The moment he said, what did he say?
I'm about ready to wrap this up and start my weekend and enjoy a cigar and enjoy some cognac and all that good stuff. So while this has been fun and it's been real and all that, I think we're going off the rails here at the end a little bit. I don't think there's much else to be said. I am certain there will be plenty of folks who desire to continue discussing the security despite today's cancellation. Joe, I'm going to let GA, since he has his hand up and he came up,
let's get Blackburn in here. Wrap. We know he's a pretty valued contributor here. He's going to have some reasonable things to say. So come on up, Blackburn. You've got your hand up.
Best Bed Bath & Beyond holders, all I can say is I feel you. And what I want to do is ask y'all to join After Hour because I want to see the lost porn, and you can see my account there. 2, where I've got a couple of tickers that are at either 99.9% loss or at a 0 or 100% loss. Don't take advice from people that post videos on Twitter talking about companies, short squeeze this, short squeeze that, because that is how that's how you lose your hard-earned money. With GameStop and Roaring Kitty, Keith Gill, a short squeeze was not part of his thesis. He had mentioned maybe a squeeze, he said the word, and that was, I don't know, 6 months before it occurred, maybe 4 or 5 months before it occurred, but it wasn't his thesis with GameStop. So don't, all the people that lost their ass on Bed Bath & Beyond, my heart goes out to you, but don't take financial advice from people that post just crazy videos on Twitter or Reddit or whatever, because all you're doing is providing exit liquidity. But yeah, anybody that does find this stuff entertaining, I'd love to see the loss porn on After Hours.
All right, Tom, go ahead.
Yeah, so
Bro,
I
don't dox
agree.
the hound.
Whatever. Yeah. I agree with you, Blackburn. I agree with you, Jerome. Just like my final thought on the whole positivity thing, like you want to be negative, right? Good investing, good trading is an exercise in risk management. You want to be focused on the things that can go wrong, the arguments against your position. You want to understand inside and out. Um, from the sidelines, it really looks like a lot of folks have gotten stuck in this narrative, reality distortion, cult kind of mentality. And that's just never conducive to making rational decisions. And folks lost everything today because they weren't making rational decisions. They wanted to be reinforced in their beliefs and not try to discredit them. Like personally, all of my biggest mistakes have been when I ignore folks telling me that I'm wrong. And I feel like there's been a preponderance of folks for months now saying that this was a really dumb idea to invest in. So I'm not like celebrating because whatever, I wasn't short the stock, but I totally understand the Schadenfreude and like, yes, this is an exercise and markets working the way they're supposed to. And if you make mistakes, you should suffer the consequences. And that's a good thing, generally speaking.
Also, just real quick, sorry to butt in, but I was wondering, Rod, since you're part of GMEDD, like, how do you feel about what Jerome was saying about GameStop? Thank you.
Nice try.
Well, no, seriously, what was I trying to say? I mean, I'm actually being serious because, like, it seems like you've invested a lot in GameStop. Like, you have a Discord and everything. So I was just
No,
wondering, like,
I have no position in GameStop, and I have not for quite some time.
oh, okay, sorry, I was under.
I
Man,
exited my position in full during the mania at an average of a little shy of $300 per share, which fortunately was a life-changing wealth gain for me. So it was a good experience for me.
oh, okay, so it's just a
People
nostalgia.
have their own opinions about things. People don't have to agree on everything.
Yeah, I'll add some commentary.
We're all individuals.
Interested in fostering discussions between anyone with any opinion on any stock, right? So if somebody wants to come in on our space and talk bearish about GameStop or talk bullish or whatever, offer a more neutral point of view, that's fine. That's part of what, informs everyone, right? You got to hear both sides of the trade, no matter what you believe personally about the company, and that's part of when we did cover GameStop exclusively, and I wrote over 200 stories on the retailer. There were several stories I wrote that were rather bearish, departures of management executives that weren't so amicable and things like that I would cover. So I appreciate hearing both sides. I'm never going to be someone to shut somebody down just because they want to tell a bearish point of view. Of course, it's best when people can outline things in a productive way and then actually give critical thinking skills a shot, right? Actually put some more thought into something than like this is trash or this is garbage. They can actually outline the reasons why that's far more productive than anything else.
Well, no, the point is that I was trying to make is that it doesn't take much. So there's a profile in this world. I don't know how it was shaped. I don't know where the rationality came, but it when you talk about relative upside in any equity, it seems to dismiss the downside all the time. And so people have this mindset when they're in buying equities that, these are multi-baggers and it's going to just, crush it. Nobody understands it. And I get it. And this is why it's going to work. And they dismiss the downside probability of any of these situations. And these are just terribly run companies. Even from the surface, you can observe these are bad companies. There are secular changes that are working against them. Usually, it's very terrible management. The turnaround narrative. By the way, if you're a student of history and you look at companies, the frequency of turnarounds actually working is much lower than people actually recognize. There's an inherent survivorship bias when it comes to turnarounds, and you see that all the time. But most turnaround attempts actually fail. And so when you get into these situations, the first thing you should do is be a student of history, look at these companies, especially the industry they're in, and recognize just how frequently these businesses fail and why in many cases the management coming in is often a last resort. And they're going to be desperate. And this has been true in AMC. This has been true in GME. This is true in Bed Bath & Beyond. And so if you're going to be intellectually honest in these conversations, and this is, I'm removing all emotion, celebrating whether something goes up or down is more a byproduct of having conviction in something and recognizing the flaws that are being attributed to, again, that upside or downside. And so, Bed Bath & Beyond going away, this is indicative of a lot of companies going away over time. It's just bad management, bad business, no moat, tons of fixed costs that you can't deliver on. You've got a debt situation that can't get resolved. I mean, it was like as plain vanilla as possible. But I don't know if like recency, if like 21 and these weird narratives have somehow gotten people enamored with these ideas that short squeezes or something else can create all this value out of thin air. But that's not a likely scenario. And as far as my view on Ken Griffin and Citadel or Gabe Plotkin, I know a lot of people who are ex-Citadel, and they're all great people. I can't say that I know Ken Griffin, but I know a bunch of ex-Citadel people. I've never met a person from Citadel that I thought was like a terrible human being and thought they were just out to crush the little guy and have this weird kind of, insider game that they're just out there to get people. I think that
But
is
on Friday,
also,
when they got fined for naked short selling by the SEC, like did that change your mind at all about how you feel about that?
No.
Why? Like if that was like if they're being fined for doing something illegal, why would you not think that was like? Why would you say they're still nice if they're doing illegal things that are hurting the general public?
Well, I think we'll see what the outcome is of the situation, right? And look, if they're
Well,
doing
what
something,
do you mean the outcome? They were convicted of it, right? And they said, very clearly they marked long 168 million shares or dollars worth of that should have been marked short.
Oh,
but every broker dealer faces
So
record keeping issues.
that was an honest
And
mistake, is what you're saying?
On a platform that is as large as Citadel in terms of global equities and Surveyor and as significant as they are they going to do this? Look, I mean, the reality is, do I sit there and tell you that I think Steve Cohen is innocent of insider trading? No, I think Steve Cohen was actually guilty of insider trading and he managed to get away with it. The point was on Ken Griffin, has he done stuff in the past that's wrong? Look, if you can provide an evidence trail where they're constantly doing terrible things and you can prove that it's disruptive to capital markets, great. Them getting caught in a situation where, by the way, there's a separation between global equities and securities, by the way, so let's make that separate. And again, I'm going to tell you right now that I know a bunch of guys who are ex-Citadel. If you think these guys are just all criminals, then, we're just going to disagree on it. But I don't believe by any means that, they're out to get the world. They're out to destroy people. They're out to like kill the innocent and crush the innocent. They just have a bullseye in their back, and it's very easy to get away with that. And that's byproduct of 2021. I mean, 99% of the people who think Ken Griffin's a terrible human being didn't know who Ken Griffin was before 21. So it's amazing that he suddenly now, like,
I mean,
Lex Luthor, an evil person.
Throwing a bedpost at your wife is a pretty serious, crime, Jerome.
He threw a bedpost at his wife.
Oh yeah, go to Google. Yeah, he did. At Ann Diaz, yeah, he did. But dude. Yes.
And it's 9,000 times more likely that he's going to accidentally fail to deliver on a quote unquote meme stock compared to Apple. So, that seems like, not much of an accident. It seems like it's strategic, right? So I don't even know how after the SEC comes and finds them, it can be like speculation or something like that. It's reality.
No, but the point is that given the scale of capital they're doing, given the scale and the frequency of trading, are they going to get in situations where they're going to have to pay fines and deal with the SEC? Yeah, that's going to happen. Do I suddenly think like Ken Griffin's out there to destroy the world and he's Lex Luthor and he's the most evil person in the world?
Why is it 9,000 times more likely for them to accidentally fail to deliver on what would be considered a meme stock compared to what would be considered a blue chip company? That's my only question right there. Like it's quite straightforward.
Okay, well, you can sit there and speculate.
And I'm not making up that 9,000 number.
Cute.
Like literally, you can look up the FTDs.
Yeah, I like.
It's not really speculation. It's fact. It's failures to deliver.
So look, my point is this: I don't have any evil wishes towards Ken Griffin more than I do anybody else in this room. I don't know why he's like the target, other than there's a lot of people who are jealous of the fact that he's a billionaire and he's done well and he's executed. Like, Citadel's a
I
great
can
firm, by
answer
the
that
way.
actually.
Like, hold on. Citadel is a great firm. It's got a ton of smart people working for them. And yeah, Ken Griffin's made a ton of money and he's wealthy. And yeah, he's probably, not the greatest person in the world. From the standpoint, he probably can be a jerk, but like, I don't have any problem with him. Like, I don't see any issue. I don't have a real issue with him.
So that's
Like,
great. But I can answer your question if you'd like. Why people don't like Ken Griffin?
Oh, why
And
don't they like him?
It's not January 2021. That was just the moment that people started to realize what was going on, and they naturally were drawn to what is the biggest thing similar to this? Bernie Madoff. Where do you think Citadel got their entire strategy? I'm not talking about the Ponzi scheme business. No one knew him as a Ponzi scheme guy. When he was on Wall Street, he was known as the payment for order flow guy. And that's what Citadel now is. They inherited that entire business model from Madoff. Whether or not you like Madoff is up to you. I personally think that the world's biggest Ponzi scheme up to that point, maybe FTX is whatever, there may be bigger ones now, but at that point, it was the biggest one ever. And back when he was at the NASDAQ, he did the exact same thing, pioneered payment for order flow. Now, what was Citadel's stance on payment for order flow back when Madoff Investments was still around?
In 2004,
they didn't like it.
Yeah,
they were
in 2004,
against
it. Citadel said, as it's on record, it's in a it's signed legalese that they thought that payment for order flow was a conflict of interest back in 2004. Then suddenly Madoff helps Citadel kind of blow up a bit, and then then their whole business model becomes pretty much facilitating the payment for order flow.
So after Madoff goes out of business, after he goes out of business, suddenly they love payment for order flow.
So your
it's their whole business
is,
model now. Actually, why do you think that is? Maybe because people at Madoff Investments quit their job and went.
So you're
to Citadel.
telling me Global Equities and
it was
Surveyor...
a hiring fair when Madoff Investments went out of business. It was a hiring fair for Citadel. And that's why they're payment for order flow now. It's not speculation. It's fact. And if you want to look at Citadel's rap sheet, this is not the first time they've been.
So Citadel
Are you
Global
saying,
Equities,
oh my God, it's
Citadel Global, because it's ridiculous. Citadel Global
it's
Equities
fact.
And Surveyor work off of payment for order flow.
How does payment for order flow work? Maybe you can explain to
That's
that.
a whole separate business. Oh my God, really?
Citadel
Global
Securities
Equities,
and payment for order flow. I mean, Citadel Securities, they have a market maker
Capital
branch and they have a hedge
Citadel
fund
Securities.
branch.
Now, hold on.
Right.
Let's
Citadel Advisors, not Citadel.
All right, calm down.
It's called Citadel Advisors.
All right, I'm letting you speak, Joe.
All right, yeah, go ahead. In terms of payment for order flow, like, tell me, is it illegal what they're doing at Citadel?
It should
in terms of the broker. It should be, is what you're saying.
They are definitely committing crimes, but payment for order flow is legal.
So
I mean, they've just been charged.
So then this is what you should do. If that part of their business is committing a crime, you should go ahead and find a way to, prove it, and catch Ken Griffin in the act. If he's doing something illegal, then go for it.
There's already DOJ investigations. We'll let them hash that out.
It's not about it's not about if it's illegal. It's about that's why people don't like Citadel. Okay, I was answering your question, which was why do people not like Ken
you're
Griffin?
telling me that payment for order flow and that's the securities that's Citadel Securities, and so you're saying that's a problem. My question is like, what is he doing illegal?
That's just why they don't like him. People don't like payment for order flow.
Do they like quant funds or do they hate quant funds? Just out of curiosity.
You tell me.
No, I'm asking you. You apparently are in touch with the people. So do people hate the quant funds as well?
Do people hate the SEC getting their cut? Probably not. Because then
so the SEC gets their cut from the quant funds.
Wouldn't you say?
Right.
I mean, this is not really Bed Bath & Beyond at this point.
Sorry.
I'm just trying to answer your question.
You're accusing the SEC of taking bribes from funds now? That's the next layer of this.
I never said bribes, actually.
Rabbit hole.
No, I never said bribes.
So how are they monetizing their relationship?
Have you literally never seen Wolf of Wall
Cake
Street?
of the Month Club?
Or The Big Short?
there's in The Big Short, they're sitting at the pool. The guy's talking to his sister,
Uh-huh.
and she's got this brand new hedge fund job. How did she get it? Because she worked at the SEC. It's enough to be in the films. It's not like it's
She
speculation that it
didn't have a
happened.
brand new hedge fund job. And by the way, it's
Okay.
made up. It's part of a movie.
Right.
She was
But
sitting
where do you
home and
think that
talked to
comes
it.
from?
She
Do
says,
you
I'm going to
honestly tell
talk
me
to it.
no one's gotten hired at a hedge fund? Look, people don't go to work at the SEC because they majored first, they got first in their class. They go to the SEC because they finished last in their class and they want to get an inside track. It's pretty
So you're
straightforward. But this
you're
has nothing
telling
to do with
me
Bed
so
Bath & Beyond. We're not talking about
so
market
this is
mechanics.
okay,
Yeah,
hold
let's try to
on.
reel
So
the
this is
conversation in a little bit. I mean, it's top of the
yeah, this
hour
is
here.
entertainment
I'm
though.
probably
We went from
wrap
like
it, but
well
I'll let
yeah,
here
hold on,
Jerome.
yeah.
Thank you
Sorry,
for all your
it's comical. I
commentary. You
love good
provided quite a
entertainment.
bit of entertainment. You're great, but we're gonna let maybe one or two other people that haven't spoken. Anyone who hasn't spoken, just said speaking. Anyone that hasn't spoken this space, come on up. Throw in your final comments before I wrap it up. We have these spaces every Friday, so tune in next week. We also have an open mic on Wednesday, and that's around 7 p.m. Eastern. So tune in. We have Tall Frenchie one. I'm gonna add you up as a speaker. You've been waving. Come on up. Say what you want to say, and then I'll probably end up wrapping it pretty soon. Tall Frenchie, you're muted.
Sorry, wife just got home. So, quick question. I see a lot of GME people down below. You know, I know last week we basically, not last week, maybe a week or two ago, I was up in a call and I was first to learn about bear thesis that you, Rod, and Hound possess in regards to both Bed Bath & Beyond and GME. And so I thought it was interesting because at the time I was not aware, right? Apparently, you guys do have a lot of articles that are out there, both pro and con. But since that time, it has been more of a very con belief toward even GME as a whole. Can you talk to that a little bit? Just because I do want to make sure that I truly understood that thesis and make sure that I can, honestly, I don't know if I truly understood it last time.
So we had.
I can take that if you want,
Yeah.
Joe.
Go ahead, Tom. I guess I'll just throw in my first comment is just be that I didn't share a bullish or bearish thesis on GameStop in any space recently. I'm not personally invested in the company, but I also am not short the company, so I'm relatively neutral. I have no real thesis on the company moving forward. I stopped coverage once I did the interview with Cohen. I felt at that point it wasn't worth researching the company, spending hours and hours and hours investigating, who they're hiring and their job listings, because if I wanted to know something about the company, I could probably just reach out to Cohen personally. But I never moved forward with an investment post interview. It wasn't, appropriate in my opinion. Now that I could speak with the chairman, I didn't think it was appropriate to make investments and speculate in that way, and also continue to publish research. It was a bit of a cat and mouse chase that seemed to have reached a conclusion. So I did well on the GameStop trade back in 2021. Since then, I've been largely out of it, and I'll let Tom take it from here. And do note, we all have different opinions, right? GME, DD, there's been several contributors over the years, and we all share different opinions. So it's part of what makes the content so much more valuable.
Yeah, so similar to Joe, made a bunch of money in 21, and I've been bearish on the company for the last year and a half or so. Basically, if you think about where the company will be in the next 5 or 10 years, there's a reasonable possibility that it doesn't exist. If it does exist in its current form, it could be maybe as profitable as a supermarket or some other low margin retail business. Like, they're fundamentally bad businesses to own. The sector as a whole doesn't have a bright future. They don't exist in a product category where they can really compete with e-commerce players like Amazon. Their own attempts at e-commerce weren't really successful. Back when we were more bullish on the company, early in Cohen's takeover, there were hopes that they would pursue some kind of digital first business that would give a margin expansion. We had speculated in the first report some kind of ad tech business. That didn't happen. Then NFTs possibly had some promise. That obviously didn't work out. So the business today exists where they can kind of optimize on how to be a profitable retailer, but they're always going to be facing structural headwinds in that business, and there's no clear path for them to do anything else. So having $1 billion in cash takes the heat off in terms that they can be solvent for a very long period of time at their current burn rate. But the idea that by owning GameStop common equity, you'll achieve some kind of above market return, I just don't see it. Like, it's not a good business, and it's, to be frank, really under-delivered expectation. Like, management, a lot of new senior people came in, and a lot of them have left since, and that's not a very good look for the board, having brought these folks in and having retention problems. And it's clear that there really is no strategy in play other than trying to optimize on how you become a profitable retailer. But again,
that's actually the thing I most don't understand is that, the gaming sector, the home goods, and the baby product sectors are things that have existed since the beginning of time and will always exist. They're huge sectors of the market. And I think that someone like Ryan Cohen, who is one of the only executives that isn't going to be taking, huge compensations, that he's going to have a huge following. And so it's weird that people talk about like those sectors as if they're just irrelevant and that they're going to go away when really like they can't.
Well, the gaming sector won't go away, but brick and mortar gaming retail will certainly be a smaller business than it is today.
And that's what it is right now, but that's not what GameStop's going to be in the near future, right? They have Player, right? They're going to take over the whole game streaming market. I mean, you watch within a year, more than half of the game streaming will be GameStop. It won't be Twitch. It won't be Kick. It will be GameStop.
All right, so okay. I guess my hold on, but I guess my question a little bit then, and the reason why I was asking that as well was to gain another understanding. So I appreciate the understanding, Toast, with your kind of I would say neutral belief that no positive, no negative, and Hound with your more bearish thesis. I know you just said it wouldn't exist possibly in the next 5 years is your belief. Do you think then that if something happens with Bed Bath and Beyond, right? And I know we're all in the current moment. It's right is about to cease to exist, right? That's the arguments being made right now in this call. If it does, and if there is value that exists into this possible new share equity, blah blah blah. Do you believe? Would you be willing, I guess, to give up the GME DD Twitter handle as a whole, because obviously it no longer follows kind of the, I guess, direction that I believe was the original intent of why the GME DD handle existed in the first place?
I can answer that one. It actually stands for, I think we went games, movies, and electronics. Due diligence. So, sorry for any confusion.
Yeah, Shortbit's proposed that we don't change the username, rather we change what it means. That's a novel idea. Yeah, I mean, I would love to change it to @due diligence, but that is taken. May need to see if I can work something out with that guy. But yeah, I mean, I don't understand what you believe we were once about. We were always about fundamental research on companies. We never looked at market technicals. We never analyzed companies that were bankrupt and tried to read filings to determine how the company could save shareholders. It was never about that. It was always about, what is the company doing behind the scenes to transform the fundamentals of the business. We wrote over 200 articles about GameStop and the different people that they hired and even people that they fired in this NFT project they had going on. I wrote all of these stories, largely not even as a shareholder, but rather just out of passion for the art of investigative journalism, and this fostering this community was something that mattered to me because I had done well on GameStop in the past, and I thought it was something I could almost do as a way that would pay back, what it had done for me was to write about it and share more about it and have all these people talk about it. So really that's why the platform was created, was for the research report that we published in January 2021, but kept it going. And look, we have now 58,000 followers on this account. We are looking to research all companies, any equity that we think could provide value. That's our goal. And if GameStop turns out one day to provide value again, we'll put out another report, maybe talk about its position in the market again. But right now, it's just not something that personally I'm invested in. Alpha Hound was also a contributor to GMEDD at one point, really early on. He was one of the original founders, so he's not currently invested in it. Rod Alzmann, he's not currently invested in it either. So we're just not investors at the moment. And that's nothing to say bad about Cullen. I love Cullen. He's a phenomenal guy. Every conversation I've had with him, he impresses me. So I really do believe in his ability to turn anything around if he sets his mind to it. The statement he put out yesterday, that memo, was really powerful. I saw some people doubting the validity of it on Reddit, and I'm sure Super Stonk's always gonna doubt anything that's not incredibly bullish. I think the statement was great, and it was validated by some store leaders. I spoke with some store leaders before I tweeted it, work at GameStop, and there was an email sent out via the @inside GameStop email address to all, not all employees, but all upper employees, I believe. And yeah, that was sent out, and this was on behalf of Ryan Cohen. So I think a lot of people should read that, take a look at the business. Really, he's talking about survival in retail is prospering, right? You're not gonna grow tenfold in retail, but if you survive and you make money, that's what he's considering prospering. It's the outlook. That's what he's moving forward. That's his intention. So take a look at that. If you're an investor, that's what I would be looking at. And again, nothing ill to say of the company, but just not personally an investment of mine.
Okay, but it sounds like you might have said yes then, that you would be willing to change the name. And the only reason why I bring it up is because I think that the investor following that is existing is due to a belief of a positive belief sentiment toward GME, not to this neutral/bearish. That's the only reason why I bring it up, is because, again, not knowing originally your original, the back and forth articles, I know that everyone has a busy life and maybe they can't read every single article. But now that sentiment has turned a little more, not truly positive, that's the only reason why I bring this up. And that's the only reason why, I believe that, to help others and to truly engage, I think that maybe even a disclaimer should exist.
Well, yeah,
to
like
go
I
and
said,
say,
Frankie, if I could use the username @DD, I would gladly use that username instead. We're trying to foster discussion on many public companies, not just GameStop. When GameStop news comes out, I'll gladly tweet about it. I'll gladly promote it. I'll gladly make sure the people that have followed over these years for GameStop will get the same GameStop news. It seems like the company's on a path towards profitability. That's what Ryan Cohen's indicated. So there's a whole lot less to investigate now, right? At one point, there are all these sexy NFT hires. Jordan, remember him? He was sexy. And that man, oh, he was a good-looking man. And we would talk about these hires. We'd write these stories about these hires because it was interesting. It was fascinating to see a retail company, brick and mortar, trying to transform into a technology company. That was fascinating stuff. That was really fun to write about. But moving forward, now the company's just trying to achieve profitability and minimize costs. So that's not so fun to talk about. So yeah, I'd gladly uh, consider us now just due diligence over just GameStop due diligence, which is what we started out as. But I don't have the username for that yet. So we'll stick with what we've got. We'll change it when possible. But at the moment, we'll stick with the @GMEDD. But I do appreciate your thoughts here. So I'm going to bring somebody else up. We'll see. Vibration Trades. You've been requesting to speak for a long time now, so I'm going to bring you up. Also, I'll let you go, Alpha Hound, if you have something you want to say in regards to that. If not, we'll go straight to Vibrations.
It just a little comment that I think the name should change if you're going to focus on other stocks. But I think inherently having a bearish shift towards the company or a more neutral shift, like, it doesn't change the quality of the due diligence. It might actually be more important for folks to hear that than like the echo chamber of positive news that they're looking for.
Yeah, like I've said, I mean, when I was writing stories about this company constantly, every week or two, we'd have a new story out. I would publish bearish stuff as well, and that's part of, I think, what what gained Cohen's respect for the platform was that we were relatively neutral. We didn't fall down the rabbit hole of conspiracy theories. We talked about fundamentals. We were objective about the business. We were excited about the business, but we were still objective. So I think that's what really brought the platform to light. I know at our peak when we would publish these really, really fun investigative stories on the company's new corporate offices in the NFT marketplace, I know Cohen was reading every single one. So that means a lot to me. Look, never thought it would get so big, never thought it would catch his attention, but it truly did, and that's great. So really appreciate everyone over the years that's tuned in. I'm going to let Vibration Trades go ahead and share his thoughts. Can't hear you. I do see your mic's on, but I cannot hear your vibration. Oh, I love it. I love it. I don't know what the point of that was, but I absolutely love it. D-Bone requesting to speak. I'm gonna bring you up. So I don't know. Is this a PP show thing? Caw, and we got another guy, Caw Sparkles, with the pink wig. Been requesting to speak in the last like 4 spaces. I've never brought him up. I don't know what it is. He's got a blank profile with BBBQ as his bio. So I can only assume he has nothing productive to say, but I'm going to let D-Bone go ahead now.
Yeah, I just wanted to give a little alpha out to all my homies out there. It's called LifeMD. It's up 43% in 5 days. Really nice breakout candidate. Just wanted to share that with the crowd. And that's all I got.
All right, D-Bone, thank you. We're going to let Blackburn go ahead. He's got his hand up.
Hey, I'll say this to, I can't remember who was speaking a couple of turns ago. If you have a lot of money invested in a company, and I myself consider the folks who run GMEDD to be a reputable source of information. If you're invested in something and, sources of news and information that you believe to be reputable, if they're posting negative things, bearish things, and you don't like that, then maybe you need to question your full faith in what you're investing in. I've got a quarter of my net worth invested in one particular stock. It's the most money I've ever had invested in one thing. Of course, I love reading bullish news on it because there's my confirmation bias. It feels good. I've got a quarter of my net worth invested in this one stock. But, hey, I need to look at and read the bearish news too and think about the bearish things, like what would a presidential administration change, what kind of environment would that do to my huge investment, or if regulations change, how would what's that going to do to it? I want to read the bearish news as long as it's legit. All right, I want to read that bearish news just as much as the bullish news, and then make my decision thereon. So, if seeing things that are bearish or neutral on a particular company you're invested in, if that freaks you out, then you need to question, your investment period, or perhaps just stick with VOO, buy an S&P 500 index fund. I mean, Warren fucking Buffett says nothing beats the S&P. And really, I mean, hey, he's right. Like, nothing beats the S&P. And then you set it and forget it. You don't need to play the casino and gambling. I mean, I have my own, I've got multiple accounts. I've got some accounts that are very boring, where I make my weekly contribution to it, to dollar cost average better, but I make my weekly contribution to it, and it's invested in VTI, and it's invested, a certain percentage in world index. It's or in the world market. It's invested, percentages here, and here. And that's going to be, that's one of my primary retirement accounts. And then I've got my casino degenerate gambling accounts. But yeah, like if, reading bearish news or neutral news on things, that's something you need to do if you're invested in a company, because you need to be, maybe you should pull out, like you're reading this bearish news. Oh man, you know what? This sounds legit. I should go ahead and take my losses and run before my loss, like with Bed Bath and Beyond, goes to absolute zero. You need to be aware of all those things.
Yeah, Hound, go ahead.
Yeah, so take your losses and run. I mean, that's the thing, right? Like nobody should be putting themselves in a situation like today where they're watching a common equity go to zero. Like have a thesis, have a stop loss, and when your stop loss hits, get out and reassess from the sidelines. Like there's absolutely no reason to stay in a stock until it's an actual zero. It's just bad risk management. Right? Like you can't actually call yourself an investor or a trader and do stuff like this.
I would agree
So
there. Oh, sorry.
I was hoping Rod would still be here. I actually didn't realize he had left, but I
He is
mean, I
still
guess I
here.
was asked that. Oh, he is. Well, I was just like wondering if we could take a sort of bet, right? That maybe like after Thanksgiving, that how everything ends up, that we agree to a in-person interview to say, I guess, who was right and who was wrong.
What are you asking? An in-person interview with Rod?
Yeah, or you, the host. I mean, either one. Just because it's we've all been invested in this play, right? And so it'll be kind of like, just a big reveal of who was right and who's wrong, and like all along, it'll be, I don't know, kind of fun.
How about a boxing match? That sounds like more fun.
Yes, boxing
Like
match,
a literal
cage
boxing match.
match.
Yeah, let's do a boxing match.
You could
Ooh,
play see who's the best at Call of Duty.
I mean,
Another
I do
thing.
more wrestling.
Yes.
If people
I do more wrestling than I do boxing.
if people are calling an investment a play, then you need to stop following them. I mean,
that's a decent way of looking at it.
Yeah, dude. Don't call it. It's an investment. You worked. I don't know what your hourly wage is or what your salary is, but when you're investing money in a company, like that's your hours. That's fucking work that you've done for people that make a crap load more money than you do. And
I mean, I'm a doctor,
if
by the way,
someone's
just in
calling the
case you're
play,
wondering.
if someone's calling the play, then you don't listen to them.
Well, it's now 3:22 here in Cali. We're gonna look at 6:22 on the East Coast. If anyone wants to come up and provide some final thoughts, go ahead. Dilly, you've requested to speak once again, so come on up. Tell me what you think.
You're muted still.
Dilly seems to be muted. Give her a minute.
Oh, sorry,
Yeah,
it
go ahead. Go ahead.
disconnected. I didn't know you were talking to me.
Yeah, you've requested to speak. You have any thoughts?
Yeah, no, I just think that like this is ridiculous that like people would want to sit down and talk about who's right or wrong. It's not about being right or wrong, man. Like none of it is about being right or wrong. Like, and the fact that like people want to drag this fucking out, it's like you're just grasping for relevancy, and like it's ridiculous. Like we don't care what you invest in. I hope the best for you. Like, I genuinely hope people don't get screwed. I would love to be wrong about this. But, like, the fact of the matter is, it isn't about right or wrong. And that's where, like, all of this shit comes from is, like, this, like, desire to have infighting. And I think that is really what this is all about. And so it's sad. And so I think, like it's just like it should not be given any more oxygen. Like the idea of a fucking like sit down is stupid. I don't know. That's my opinion. I have the right to my opinion. Other people can think whatever they want to think.
Yeah, all jokes aside, this definitely does wrap up our coverage of Bed Bath & Beyond. We were hoping to have this one final Spaces on it, a big blowout, grand finale of the messy fireworks over the last few months. I love the sound effects. And there's definitely some people that aren't going to let it go. I think a lot of people are going to think that their investment can still turn around, even though it's going to be wiped out from their accounts come Monday, and it's unfortunate. But hopefully, the big point overall of having this discussion was to let everyone hear both sides of the trade and of the company, kind of run down what went wrong with Bed Bath & Beyond, and hopefully some people that have been invested in the company maybe hear the other side and then give it a shot, because I think there's going to be a lot of people that end up getting burnt out of this. They reflect on the PP show and all these other big YouTubers and big finfluencers that talked and promoted the trade. They're going to think, oh wow, like maybe I was wrong to look at those people, because I think it takes being out of the trade to look at it objectively, right? If you have an investment in it, you're maybe not so objective. Everyone thinks that their hometown sports team is the best sports team, and everyone gets blind to the reality of it when you're far too invested in something. So I think there's going to be a lot of people that come Monday see their balance hit zero. They're going to start to look at this from a different lens. Maybe they'll reconsider what they thought about Rod, or they thought about myself, or anyone else who had been speaking out against it. I know Justin of Domo Capital received quite a bit of hate for speaking out and telling people, urging people to sell their positions because it's going to be worth zero. And look, that's what's happened, and it's unfortunate. So hopefully some people, maybe just a few people, are savable and tune in the future. I'm not saying that we provide the best finance content on Twitter, but we do provide, a pretty diverse set of opinions every week. That's, on Wednesday, we do our open mic at 7 p.m. Eastern. Fridays, we do these calls at the market close. So tune in. We've also got a book club. If you want to expand your market knowledge, we've got a book club. We do it every month. That's going to be on Tuesday, this upcoming Tuesday, in the GME Discord server. So, yeah, check that out. I'm thinking it's probably a good time to wrap things up. So,
yeah, Toast, I just want to say
go
one
ahead,
quick
Showbiz.
little message to all the haters. The point
They're
of
not haters, man. They're people with difference in opinions. It's not hate.
Okay, well, the difference of opinion people, to all of them who are against GMEDD being GMEDD or whatever, the whole point of it is just entertainment and fun. If you're relying all your investments on Reddit or Discord, you're not doing it right. You need to go back to the books and figure out your investment and then present it to people, not just say these people are against me. It's your goal to win people over with your analysis, just like GMEDD did in the first place. So it's not about are they bearish, are they bullish, are they neutral? It's just a forum. If you like to participate in this forum, you can. If you want to participate in whatever other forum, it's all about just human interaction and just figuring out, how Roaring Kitty would do with the magic 8-ball. You're just trying to just put it out there and see how you feel about it. And if you feel good, then then you're trusting your instincts. But the more research you do and the more opposing opinions you hear, then the better your understanding of the whole market will be. And so I got an outro for you, Toast, if you want one.
Yeah, we'll wrap it up here. So go ahead, Shortbiz. Let's hear this outro. Hopefully the audio comes through a little bit clearer this time.
Was it bad last time?
It was
Sorry.
iffy. Let's hear. Let's give it another shot.
This is from my car audio.
Okay.
So let me locate a speaker.
You
Okay, I
always
got a
seem to be in the
speaker.
car, Shortbiz.
Yeah. I like to drive fast.
Oh, okay, all right.
But
I'm impressed.
So yeah, last time was right at my home speaker. So maybe next time you can find a channel. I can just send you these two or whatever.
Let's hear
Here
the
it
intro
is.
or outro rather. Go ahead.
True.
This has been GameStop due diligence. Bed Bath & Beyond canceled, released, and extinguished. Thank you for joining us.
Amazing.
All right,
Amazing. No better way to wrap it up. So thank you, Shortbiz. Remember, guys, we do the open mic on Wednesday at 7 p.m. Eastern. We do these calls every Friday at the close. We also have the book club coming up on Tuesday. Pretty much everything can be found on wook.gg. That's our GME Discord server. Come chat. We talk about all stocks and equities. You can share your opinions in a text-based environment. Some people don't like coming on via voice, so check that out. We have discussions 24/7 on the public markets. So thank you, everyone, for tuning in. It's
Thank
been a
you
good
for having
discussion.
us.
Thank you, Dilly. Thank you, everyone. Thank you, everyone. All bears and bulls alike. You're appreciated. So we're going to wrap it up here. Thank you, everyone.